Yeah, good morning. Um, Welcome to today's weekly forecast. Today's date is the 22nd of October, 2023. So we're going to go through our instrument, the US dollar index, the DXY, the euro dollar, and also we have a look at gold to see what exactly is happening in the market. This might be a little lengthy video, or it might be short, I don't know. But I think there are things I had to touch on. So let's get into it. Before diving into what the wave and the count and all of that is doing, I want us to know that market does not do anybody a favor. And all you can do is that you have to safeguard your capital. Otherwise, you'll be losing big and you can blow your account. You must deploy the right strategy. And the right strategy is this: never trade with lots of risk against the trend. When market is moving and it seems that, okay, this is the trend, and that trend is not ended, and you're having a pullback, you must be very careful on how much you want to commit in a pullback, if it's a pullback. You are seeing an impulse and market gives you an opportunity for a pullback, you must trade cautiously with tight stop loss. That's the first rule. And never commit multiple trades against a trend until the trend change has been established. Number three, when you are trading in the line of a trend and it's becoming apparent that the trade is getting to its end, you must also be very careful to trade at the end of a trend. The trend may be elongated, it may be extended, you can never tell. And when the trend is going to change on you, you don't know. So care must be taken. In case there are some of my followers that are probably entangled, I'm going to do well to really dig into the structure and to really be able to help, but never trade against the trend with lots of commitment. I never had to a losing position, because when the trend is going and you are carrying something in the negative, and with your analysis, you are telling yourself, okay, well, this is where it's supposed to stop, and the structure changes in the middle, then before you know it, your negative will be increasing. And when you thought, okay, let me play a smart one with the trend, okay, I think it's counter trading now. So let me start from here to try to, trade against it and probably reduce my loss. You might be shocked that what you want to use to reduce the loss might also grow into another loss. So, and those are the reason why when you analyze, and this is your analysis based on structure and your retracement, stay with your analysis when you are committed to it, and your trade is executed. Map out where you're going to put your stop loss in case anything changes. So if it hits you back and you are out, be happy. It's either you are out on a small loss, or you are out on a break even, or you are out with a profit. Small loss, break even, and profit. It's never correct when you have a big loss. It's never correct. That might mean that you are too much in anticipation, and probably you think you can control the market, or you think you have mastered it and this is what the market is going to do. It's never like that. It's never like that, because structure do change. And when we are looking at structures, we have to look and look and look again and try to study what exactly they are trying to make out of the structure. And in the end, the structure will still make sense. That's just the thing. The structure will make sense. And why that happens to us at times is where they are trying to, put structure in a nest. And most of the time, wave 3 can be in a nest. And when it's in a nest, that's why it appears as if it's extended. Wave 3 is always extended. So if I want to do a recap of what I've said just now, is that when you are in a trend and you are counter trading, it has to be a very minimal, commitment to it with a tight stop loss. That's the first rule. Then when you are trading a trend and we are getting to the end of the trend, you must be careful how much capital you are committing. And when you are trading and it's losing, don't add to a losing position. The best strategy so far that I know, that I've been using, is that if I do my analysis and I say this is where my entry should be, the next thing I want to do immediately is my stop loss. Because based on my analysis, if my analysis is actually correct, it means that price should not come back and hit my stop loss. And usually I want to give it probably 10 pips, 20 pips max. You trying to extend your stop loss, you are trying to increase your pain, because it will get to a point that the negative had grown into what you think, I can't part away with this. And the more you think you can't part away with it, and the more it will continue to grow into negative until you are really messed up and you're having headache. So you have to deploy the strategies. Think about your strategies. Think about what you have to do, because the market does not have to listen to you, and it will not do you any favor. Now, let's go into the DXY. This is the DXY, and I pretty much explained to us what we've been doing. This is a wave 1, wave 2 here. And of course, we had wave 3 in the middle as a nest. And we said that this is wave 3, 3, and 3, 4, and this is the 3, 5. So wave 3 has ended here. And we believe this is a wave 4, which is the big wave 4. And also, we say because it's a big wave 4, we are trying to do wave 5 to finish the way to the upside. But what we have seen so far, which I want us to see on the US dollar index, is that wave 4 came here, of course, collectively a WXY. So which is like 1, 2, 3 swing here on this time frame, a WXY, which is correct. And we saw this impulse. Now, if we take this impulse to be a 1, and we are seeing this as a 2, after the correction of a 2, we should break up to do a 3, which will break here. That is what, and the way you want to align yourself. you may think that the correction of a big 4 has ended here, and this is a 1, and this is a 2, and we're going to break down to do a 4, or to do a 3, a 4, a 5, and we are turning down. The question you should ask yourself is that, what if this is actually a WXY of an A, and this is a B, and that we are turning down one more time to finish another WXY, or a C, so that it becomes A, B, and a C before we actually do the 5th wave? What if that is what the structure is trying to tell us? That is how to think. And you must now look for answer. Look at the footprints. Look at what they are trying to do. Look for the clue to tell if this is a 1 of the ending structure, a 2, and a 3, or this is A, B, C to finish the 4th wave. Now, let's now go right into it. From the things that we know that the RSI is telling us, this is a 3, and that is the peak. A 3, 3, and a 3, 5, where you have a divergence, and we are telling wave 4 here. Wave 4 peaked here, and we in wave 5. That is what we have to dig into. We're in wave 5. So we are going to concentrate, because eventually this might just be A, B, and a C here, and it's still going to play within what the limit of wave 4, because the limit of wave 4 to the downside of big 4, it's here actually. This is 38 and this is 50. So it can still play within that. Now, if I try to zoom in to concentrate here, this is where my problem is on the US dollar index. If you look at the internal structure here on a 4-hour time frame, it's more of a three-wave structure, a 1, 2, 3. That is where the problem is. Let's go into the 1-hour time frame. Even on the 1-hour time frame, we thought that this was going to be probably the end of this, of course, and the first impulse here. And this is a 2, but it never forms a 2. So it's like an ABC of the 5th wave in that regard, and a truncated 5. So this becomes a new wave here. So this one becoming a new wave here, and that is where another problem is. Because if you're going to look at this being a new wave, let's get that into it and see if this is a new wave. Is this one a 1 and a 2? It looks like a 1 and a 2 for sure. So if we take it from that end, or maybe I should just try to go into the lower time frame so that we can measure it very well. That's a 15 minutes time frame. So this is where is it now? Okay, this is it here, right here. This is it right here. So let me try to zoom in on that time frame. Now, from here to here, is it a 1 and a 2? I want us to follow it. We could pretty much say this is like a 1, a 2. It agrees with it. And this one agrees with a 4. Sorry, a 3. And this one still agrees with a 4. Which is ABC of a 4. It agrees with it. If you look at the retracement, So this is still about 23, just a little below 23. Maybe it agrees with a 4. Now the problem is now here. The problem is here, okay? Now the problem here is, if we say we have finished a 4, we're going to do a 5, and this is a 1, and this is a 2. If this is going to be a 1 and a 2 of an impulsive wave that we have not ended, because if this is and we're doing a wave 5, and for it to give us this correction, at least it has to form a 1618 extension. That is where the problem is with this. Back to this point. So what it did was just to go past a 127, and it ended there. So that is where the problem is. If it has done a 161.8, that is typical of wave 5. All they can do is to do a 4 and truncate 5. I will agree with that. That is where the problem is with this. So at the end of the day, it kind of now look like as if it is 1, a 2, and a 3 wave. Now, that's the problem with it. And we're trying to look at, and the price now seems as if, oh, what they have done is, okay, they have done a mini 4, and they are going down. They are coming in again to do this and go down again. That is where it's not making any sense anymore. So price came up, it came down, broke the structure here. So if it breaks the structure here, then we should expect a deep correction. I have a question here first, but a deep correction that we expect, we are not even getting it. So you could have said that, okay, maybe this is an A. If you look at this, an A and a B and a C. So if it's an A, a B, and a C like this, then price should be going up to break up again. That is what we should be thinking. And so if this is A, and this is a B, and this is a C, between my A and a B, what extension am I getting here? Or retracement am I getting here? The retracement also does not make any sense to this point. If this is an A, and this is a B, and this is my C, for me to turn up and break up and say, okay, we're now going impulsive to do a wave 3. So for this to be a C, this must be giving me a 5-wave structure to the downside. And that is not what I'm getting here. Being a 5-wave structure, no, that is not what I'm getting here. So we are trying to look at what this thing is to us. Let me go back to 1 hour time frame and how to make any sense out of it. So now looking at this, which now looks majorly as a wave 1 and a 2 and a 3. So it's like just a 3-wave to the upside. And that cannot be, that is not looking like an impulsive wave 1, because its momentum does not mean that it is a motive wave. So this is an impulse. So it's not a motive wave. Motive wave that we expect is 1, 2, 3, 4, 5. And that is not what we are getting here. So this is a correction which has ended itself here. And also this one also is more or less like a 3-wave structure. 1, 1, 2, 3, 1, 2, 3, and also this is 1, 2, and a 3. So the retracement here is not making any sense, and the price did this. So this is where it's getting messy. So things are in the middle and it's very messed up. So if you look at DXY, the same thing had happened here also on DXY, between here and here, a wave 1 and wave 2 and wave 3. But what I'm saying on all of these things, well, I'm saying that on any time frame that I'm looking at, after this move, this had rather been corrective. And everything that is happening here has been also corrective. This has not pulled to a reasonable low, high for me to say this is a wave one, and it didn't look like it. These are examples of a motive wave that you can count 1, 2, 3, 4, 5. Even here, you can count 1, 2, 3, 4, 5. And if you look at the extension will always give you 161.8 before you have your wave 3, 4, or 4 and 5, if you're even going to truncate 5. It has always been like that. Anywhere you count it, even here, 1 and 2, 3 has to be at least 161.8. That is not what we have here. So it's kind of looking like we're going to have a bigger correction of 4, where this is just A and this is B in the middle. We may be coming down. So we may be coming down. So if we are looking at DXY and we are looking at the possibility of we coming down, there are levels we must mark to realign ourselves if we are coming down. And if anything breaks, then it is the end of. So we have to look at the possibility of going up and the possibility of coming down. Now, looking at DXY, this one is not a perfect motive wave of 1, 2, 3, 4, 5. It's more of a correction. This could have just been an X and it stops there. So where this one go, an A, a B, and we're coming to do a C, because extension of from here to here, back here, will give us here or here. So which is still good. Now, if we are going up and we say this is a larger W and X or AB, the correction should not go more than 78. If it breaks 90 in a deep correction, then it is not what we are thinking again. So it shouldn't break 78, and I believe the retracement of 78 should be where I have my blue line. Yeah, that is 78, and this is a 90. So if price should come in here and engage this place and break it, then it may mean that we are going more up. But it's not making any sense for now here. It's not making any sense for now here. So what is looking like to me is that we may have finished this as a structure of X, and we may be seeing price trying to make more low for dollar to lose strength. So if the dollar should break this level again, then I have to realign myself. So it's 50-50 in the middle, but with more probability of price breaking low to do a larger WXY. That's what is kind of looking like to me. So, and if we are to project like that, it may mean that this is a wave 1, A, B, C, to give us an extended flat in the middle. So this one becomes a 1, and this one becomes a 2. And now we are trying to break up to see a 3, 1, and a 3, 2 to make it more larger to come here. So this may now grow into a 5 waves to finish this leg, and before we turn up to do a wave 5. That is what is likely to happen, because if you look at the retracement, the old retracement of 1 to here, it still tallies with a 1 and a 2 to the upside for us to do a 3. So any opportunity we have to make an entry here, we should just look at an entry and give ourselves a tight stop loss in case price wants to go up. And if that happens, you're not going to lose much. That is what you can do. So if you go to US dollar index also, if you go to US dollar index also, and that is still what we can do. But in the US dollar index, it's kind of more messy because if we are saying that this is a 1 AB, sorry, yes, a 1, because this one is too deep. So if it's a 1 here, A, B, C of a 2, and we're coming down. So this on US dollar index is too deep. It's too deep here. It's too deep here to be a 2. So they can still probably manipulate structure more around this area. But then where it will change for me to say we are going more up and not down is at this level. This is 78 here, and this is 90. So we are kind of very close. If we break up and break this level, this may well be the beginning of a wave 3 to the upside. But it doesn't look like it because of what I call my wave 1 does not look like a wave 1, is looking like an X. And if it's an X, one thing that we should know as an X is that where is the primary X? This is the primary X here. Price should not break the primary X. Any break up here does not, has violated this one being a control of a primary X to guide price to the downside. And a break here means that that's the beginning of a wave 3. And if we should get a pullback, we should buy US dollar. So that is one thing that this one is guiding us as a primary X. If you also look at the DXY, this is still the primary X here, and price is above it. So the DXY is much pulling lower. On US dollar index is much pulling upper, but this is also to guide us. So our guide is still where we have the blue as the primary X. A break out of the primary X means that we are bullish again on the dollar. So, but I think it's much better to align ourselves as if we are coming down, because of this particular wave is not a 1, 2, 3, 4, 5 wave to me. And that is the only catch that I think this is just the beginning of, another correction, and this is probably a bigger X, which is, if this one is a primary X, this one is now a secondary X, and we are going to pull much lower to finish this as a Y, W, secondary W, secondary X, and a secondary Y. That is what I can see now. So with that information, if you now switch to our instrument, let me first still tell you something about Euro US dollar. So let's still let me go to 4-hour first on Euro dollar. Remember how we sought the problem of the next here, that we said this is 1 and this is 1, 2. The video that I did the last weekly video that I was talking about broccoli, it's a very important video for you to watch. It's a must-watch video. And so 1 and 2, and this one now grew into a nest to finish with 3. And a 3, 1 and a 3, 2. Then inside of a 3, 3, we began to count 1, 2, 3, 4, and a 5 to have finished 3, 5. And that we are now seeing a dip 4. And the dip 4 is now looking like it's going to be into like a 7 or 7 swing. That is what we are saying now. So let me go to where I have my structure, my drawing. So we're going to look at that. So we're looking at the possibility of a 7 swing, where this one becomes a 1, a 2, a 3, a 4. We're going to do a 5, a 6, a 7 before we turn down. That is what we're talking about now. So we're going to go right into where I have my drawing, and we pick 1 hour. We're going to do 1 hour time frame. One hour. Now, this is a serious business now. just like I said, and I showed us what a primary X is and what a secondary X is. So this is a primary X here. Price should not be seen breaking this primary X. And this now looks like a secondary X, and that's looking like a limit of what price will do if you're looking at this. And just like I said, this one is never, it looks like a 4, but this one is never a 5 because of a 1 and a 2. And this one didn't even give me 161.8. So at the end of the day, it's a 1, 2, 3 wave, and which is like a secondary X. So it being a secondary X, I can even still use this as whatever annotations I want to give it as a secondary X, or I might want to say that this is A, B, and a C to the upside. So it doesn't really matter to me. Now, this is where we are facing now. And stylishly, price is climbing to the upside. Now, if price should violate this, just know that we are going up. Because this is the secondary, this is the primary 2 here. We are almost at the primary 2. And once we violate the primary, what we call the primary 2 of this wave, then we are going up. So it will not now become 1 and 2 anymore, because if it's 1 and 2, we want to sell, then we should be coming down. But the way I look at this thing, it means it's like we are going up. Like, so it will not be an A, B, C for us to turn down, except we get a reaction here. So, and if you are trying to sell from here, of course, you must know the limit to where you can expect price to. So, because that's how to think, really. That's how to think. It's still a bit going up bullish. And if we come in here to pick our sell order, you must give it a tight stop loss in case the dynamics change. So we are still thinking of that possibility of we coming down to do a 3, but it is not looking like that. This one is telling me that this is like a secondary X and not a 1 for us to have a 2 based on the analysis of the other 2 instruments. But let's see what we can make out of here. Let's see what we can make out of here. Assuming it's not A, B, C to turn down. Assuming it's not that. Assuming we have just done the first X here and we are turning up. And that this one has become a 1 and a 2 here. So if we want to measure, and this one has become a 1 and a 2, which of course it could be, based on what we can see here, it could be. And so we may say that this one now is a 1. We may say that one has become a 1. This one has become a 2. It's just like trying to change. And that this one is going to grow into a 3. And it has to grow into a 3 proper by breaking up. So, and if that is the case, we may be seeing this as a 3-1, and we are doing a 3-2 in the middle. So let's align ourselves as if we are coming down to sell, to break low, or that we want to push up. So there's nothing stopping you from trying to have 2 order placed. If you place 2 order, you know, you are just trying to think of the complexity of what you are dealing with, and you must give it a tight stop loss on both ends. Okay, for this one, that we should know that if we are doing an ABC to the upside, your ABC at 100 extension, I want us to see what I'm trying to do. At 100 extension from this point to this point of 1, and back to the point of 2 here, in case you are thinking, oh, I want to sell, tells you that your 100 extension is right here. And that is where the last place you can say you want to pick a wave to, because to the downside, because anything above that, which is 123 here, you already had a break of Y at this blue. So a 123 will not be an option here. So this is the fringe where you can say you want to pick your order to sell. And it has to make 100. So the only thing you can do is to sell like 2 pips below here and put your stop loss here in case anything changes. So that is how to calculate risk and how to reduce your risk. Based on analysis, price has no business breaking here. So if I want to do anything, I want to sell here now. I want to sell thinking that I want to sell maybe 2 pips below, maybe around this area. So I want to sell at 1.06207. 1.06207, and I want to sell there. And then I want to, from that point, I want to put my stop loss maybe just around a bit above the primary 2. And if my primary 2 is here, so from this point of my primary 2, I may just do like another 2 pips above it. Or 1.5. Yeah, 2 pips above it is 1.06301. So at the end of the day, 1.06301 from here down to 2 pips below here is just like 9 pips risk that I'm taking. That is how to do it. 9 pips is okay for you as a risk in case price wants to turn down. That is how to actually minimize your risk. 2 pips below here, this is the limit of 100. And like 2 pips above the primary 2, it is okay. 9 pips in all in case price wants to. So if price wants to come down, price will not even take that. Now, that is if you want to sell. Now, if you want to buy, then we have to now recount this as we are coming down. And somehow, this also looks like a 1, 2, 3, 4, 5 to the upside here, which is quite, what you can say for or an impulse to the upside. This is a 1, an ABC here, and a 3, a 4, a 5. Then before we came down, a 3, a 4. Then the last 5 went up also as a 5-way structure. You can count it if you want to count it. I've counted it. So this one can now be a 1 here. So if it's a 1 here, then we can say a 1 in the green is that of what we now change that to be a 1, and that we are coming down to do a 2. Sorry about that. Then this 2 comes down. So the count now is bullish for us to have a bigger fall. Now, in case we want to do that, then we have to look at the internal structure of this wave to know that, okay, if we should go up, we are going to come down to pick a buy order. And at what point, where is the low? So let's look at the internal structure on a 15 minutes time frame to look at that. Now, what we are saying is that we are looking at the possibility of this actually is not an A, that this is an A, and this is going up as a B. This is coming down, this is the peak, and this becomes our A. So if this one becomes our A, and the one that is going up is going to be a B, so it's going to come down again to correct to pick a C. So if that is what we are aligning ourselves, So we still have an opportunity to come down one more time, pick an order before we go up. So in that case, you will not mind, because the B can grow to break the top here. In fact, once that happens and it breaks the top, your sell is out. You can only pray for this to come down to pick an order. So, but if it comes down to pick you first, fine, go up with it and still try to execute your sell order here. And if it knocks you out, then you have this one going for you. So minimal risk is, it's is expected when something is in the middle like this, and it could play both ways. But the tendency now looks more like the price is going to break up based on the count and what we are looking at. It's more likely to break up. But now, this order being a 1 and this is being a B, and a C, we still have opportunity of coming down one more time. So it's not lost here. You've not lost any. So because there's a break of structure here, that is a break of structure. So, which is an A, and this one caps here to, same base. So we've not seen another break of structure. So the next break of structure to finish a B will be this one. So once we break that structure to the downside, you are having an opportunity of your lifetime to pick an order. And so if it's coming down, it must come in a 5-wave structure. So if we see a 5-wave structure to the downside as a C, is an opportunity for you to pick your buy to the upside. So whatever we have in the middle, we can plan to try to look at how to close our trade running in the middle while we are looking at these ends as a sell and at this end when it comes down as a buy. That is all we can do for now. So on this trade, the retracement so far to the upside now, in case we break the retracement so far from this purple down here, we may still climb up a bit. It can be anything, because if it's a B can actually break the top. It can react at 78 to the downside, and it can also react at 90. It can react at 90 because this is an A, so it's not a cursor to this. It's not a correction of from here to this point anymore. So we are saying that this is an A, which is a structure, and we're looking at this as a B, and for us to have a C. So we're going to take our time. So the last structure would always tell us that this is the direction now. So if this one comes down to be a 5-wave, then you can clearly say this is the direction to the upside now. That is what we can say. If we are seeing this as a C going up to come down, that's another possibility. Let's try to look at what we have in terms of the structure of correction of A, B, C. Just like I said, that this may be an A, and this may be a B, and that we are going to do a C to the upside. So if that is the case, we want to count 5 waves to the upside to finish this as a C to come down. And that's another thing. This is 1, this is 2. This being a 3, a 3, this is where it's all messed up. This is where it's all messed up. It has, nullified this one being a 5-way structure for us to pick a sell. And that is why it's messed up here. So because we must be able to use our knowledge, to our own advantage. We must be able to use it to our own advantage. Even if you say this is okay, this is the first part of this correction of a C, and this is an A, and this is a B. So the last C must count 5 waves. Up to this point is a 1, 2. And up to this point, you can say it's a 3. This is not a 4. This is not a 4. This is not a 4. So that's where it's messed up. So logic, it's very important, and what we know. So this is looking like we are going to come here, pick an order to go up. And with that, I'm done on all those, Euro USD DXY and US dollar index. So my submission, my summary is that dollar is going to fall. That is what we are saying now. Dollar is not going to come down now. Dollar is going to fall more just for us to finish the fourth wave correction. And thereafter, maybe in about a week and a half, dollar is going to gain strength to do a wave 5 downside. That is what it's looking like. So this one is like now an X and not a 1. And probably we are seeing more shift to move to the upside now. So with that said, let's go to gold, and I'm going to finish there. I'm going to finish there on gold. So let's look at gold. Gold on 4-hour time frame. That's gold on 4-hour time frame. Even let's look at gold on daily time frame. Gold on daily time frame, it's very, very bullish. It has been a bullish run. Let's see if I can. Yeah, it has been a bullish. You can see this move. That's the trend. It's a bullish run. We've had a correction like A, B, C, and we are going up. A, B, C, and we are going up. So A, B, C here for more bullish run. And what we just had and we dealt with is another correction here, A, B, C. So where this one becomes a flat in the middle here to have the last leg. And that's why it didn't probably do a 4 and a 5, a 4, a 5 before pushing up like a motive wave. So this one has become a motive wave and it's breaking structure to the upside now. All we are praying for is for us to have a bigger correction of a 2, which we've never had now. This is killing. This is killing. This is killing. This is a blow. It's a blow. But is it coming down? Is it coming down? That is what we have to do. But from what I can see on the daily time frame, and what I can see also on the 4-hour time frame, which is this, and what I can see also on the 1-hour time frame. The 1-hour time frame isn't a good price action for us to think that we are going to do an ABC for now. If I bring out my RSI for 3 for sure is here on the 1-hour time frame. So it may look as if we are coming to the end because this is my RSI here, and this is like a wave 3. If I go to 4-hour, we have to, every of those daily time frame, 4-hour time frame has to tick as wave 3 before we say that, yes, we are done. Now, still here, you can see my wave 3 here on the 4-hour now is putting it at par with this. So which is telling me that this is still part of wave 3. Now, if I go to the daily time frame, if I go to the, I won't even see anything. I won't even see anything because it's just all okay. So this is where I time as my wave 3 and my wave 4 and my wave 5. So you can see that it has pushed. So it has not given me a peak. So we are still, it is still part of wave 3 here. This is what it's telling me. We have not seen a wave 4. We've not seen a wave 4. But is it a wave 4 that we have seen? So we have not seen a wave 4 clearly. I can say that based on what I can see here, even though the 1-hour time frame, the 4-hour time, 1-hour time frame say, okay, we have done a wave 3, and the 4-hour time frame is okay, this and this at par, so it's still part of wave 3. So, and here also as agreed, like a wave 3, but this is the peak of wave 3. That is what I can make out of here. So we've not done a wave 4. We have not done a wave 4. So let's now go inside and see what is happening here now. Let's now pick our 1 hour time frame, and I'm going to bring the drawing for us to see what it has grown to be from this turn here. Now, this is what it has grown to be. Now, the first move, which is very impulsive here, and this is the, probably the ending or leading diagonal that we have here as a wave 1 and wave 2 is wave 2 primary is very, very small. The correction with wave 2 primary is very small, which means it's very bullish. And that's why the wave 2 correction primary is here. So coming down to do a big 2, this is the primary wave 2. You must know what a primary is at all time. So this is a primary wave 2, which will form the basis of where the correction may get to or very close to if you are coming. So the correction may come very close to 1866 if we are to come down. 1866. If anybody is, I don't know if anybody is selling, in fact, you can't even be selling from 1802. It's not possible because, yeah, 1810 is the low. So 1810 is the low. So we have to know that 1810 is the low. You can't be selling from there and say, so you can't be selling this. So the primary is this, which price will not break if it's coming down because it's motive. Now let's now count the structure. So after a wave 1 and wave 2, this is a wave 3, and we've thought this is a wave 4 and this is a wave 5, but it has changed, just like we had on euro dollar and DXY and co. This has now come to be a 3-1 and a 3-2. So thinking that this is a 3-4 and a 5 has changed. So we are now seeing the internal structure of a 3-3 building, because this is a 3-1, this is 3-2. So building an internal structure of a 3-3, you can see this is a 1 and this is a 2 and this is a 3 of that 3. This is a 4th wave of it, and the 5th wave of that 3, it looks like it's here. So that's 5th wave of that 3, looks like it's there, which may now mean that, sorry. So it's there, which may now mean that this 3 has ended here as 1, 2, and a 3. Now, so because this is a 1, 2, 3, 4, 5 in the black to give us the 3 in the red. So it may now mean that this 4th wave is the 4th wave of the inner structure of these 3 to give us these in the red. So we may have finished wave 3. So we have not done wave 4. So we are trying to do a wave 4. That is what I think, wave 4 in the red. So it's like we are trying to do a wave 4 in the red. And that looks like what is happening also on euro dollar, trying to do a wave 4, a big wave 4. So we may be seeing that we are doing a big wave 4 and we have not done a wave 5, which means that we may be breaking up again. After this, we are done. So that is what I can see. To be honest, that is what I can see. That's what I can see now. So breaking this trend line means that we are done with this wave 5 of 3. We started from here, a 1, 2, 3, 4, 5. We are done with it, and now we are coming down. How deep are we going to correct this is another thing entirely, because we may, in as much as we are trying to see, maybe it's a wave 4 that we are correcting, then that is going to probably give us the divergence that we are looking for before we do a wave 5. So if that is the case, let's look inside of here to see what it is really. Now, looking at this wave here, we thought we have done a wave 1, 2, 3, 4, 5 to finish a 3, because this is like a 3 here, and this is like a 4 here. You can't call this a 1, a 2, and a 3. It is not possible. You can't call the whole move here as a possible 1 and a possible 2. If you want to label, you can think like that, and a possible 2. This one will not do a possible 3 because it's not a 1, 2, a 161.8 extension here. And this one will not become a 2 because it has even eroded 90 to the downside. So at the end of the day, so it's a 1, 2, it's a 1, 2, 3, 3, 4, 5 here to finish a wave of 3 here, then the fourth wave of 3 and the fifth wave of 3. So the inner structure here, 1, 2, 3, 4, 5. To have finished this one means that we are actually finished with 5 of 3 red here, and that we are going to do a wave 4 red. That is what is now looking like. So a wave 4 red now may now give us a deeper correction or pullback, and it can be shallow, because if you are going to do a wave 4 pullback, now let's look at where the primary 2 is. So the primary 2 is here. So the primary 2 is here, this black. Now attempt to know where this could correct to from this black. So it has broken a little below 14.6. It has not gotten to 23. It has not gotten to this 38. This is the limit of correction here. And this is 50. If we should break 40 here, then you know it's a big 2. So, but I don't think it's big 2 we are doing yet. We are not doing big 2 yet. We have not gotten that divergence to bring us very close to this trend line. So if we come here, we may come here and go up to truncate or extend. Nothing is impossible. So with that, I can tell us that if we are thinking that we are going to correct with 4 now, and we're going to go up, if this is the limit of 4, we may be seeing this price later getting to either 22.27 or 22.28 or 22.38. 22.38. These are levels that the price will actually visit 22.27 or 22.38. So it's 20.27 or 20.38 before we may think of finishing with 5 here, and before we come down. So we may be seeing this as a potential. So if we are selling, we should be looking for a place to get out before we do this. And of course, price may still try to do a wave 4 here, depends on how deep wave 4 is, and truncate with 5 around this area. 2009 is possible before we come down. So it all depends on how much deep this is going to be and how much wave 5. So we have not done with 5, we are on wave 4 red. So we have not done with 5. That is what I'm saying now. This is not going to go into a very deep structure, or sorry, a very deep correction of 2 now. It's probably a 4. It's a 4. Not until we break here. So if you should break this place down to downside, then you now know is we are doing a 2, bigger 2. Now let's now look inside of this wave on the 15 minutes time frame to make any sense out of what is happening currently. Now, these grew into a 1, 2, 3, 4, 5 to this point, a 4 and a 5 to this point, a 4, a 5 before we have this to the upside. And when we are talking of a B, this is now a primary B. If you're going to have this correction to the upside, then it should not break the primary B. If anybody is selling, you are selling, this is the area you must have your stop loss now, which is 1992. That is where you must have your stop loss now if you are selling, because it's now like we are finished with 5 of 3 here, and we are going to a bigger red, a bigger 4 red. That is what it's looking like. Now, the way this had come down, it came down like an A, B, and a C down here. A, B, A, C. This is not a 1, 2, 3, 4, 5 trade. It is not for me. It is not for me because this, you can't say this is your 3 and this is your 4 and this is your 5. No, because even your extension will not be correct here to make this one a 3. The extension, the retracement here does not look like a 3, like a 2, and your extension will not be. Let me mark what I'm trying to tell us now here. So from here, down here, back here, 161.8 is here. So this cannot be your one. This is where you would have thought of, oh, your 161, your 3, your 4, your 5. So it's not. And if you take this one here, 1, 2, and say this is, what would this one be? You know, what would this one be in terms of that? So this one will correct for a 1, 2, 3, 4, 5 here, but not here. So it's still a 3-wave format, like a 1, 2, 3 of A, 1, 2, 3 of A. Now a B in the middle, another 1, 2, 3 of C to give us an A. That is what I'm pitching for now. So if that is what I'm pitching for now, we're going to see how this one is going to go up, and it should not violate. It should not violate this B here. It shouldn't violate it. So this, as this one grown to be a 5-wave structure, that is what we probably must look into now. This A, is it a 1? If you go into a 1-minute time frame, if you go into a 1-minute time frame, yeah, it may look like, okay, this is a 1, a 2, a 3, a 4, a 5. It's not impossible. Then if that is the case, and this one is not an AB, if it's a 1 and a 2, so what are we going to get? Because it could easily turn to be a 1 and a 2. If it's going to turn to be a 2, this can be a 1 and a 2 to this. Of course, it's still within what we expect as a 1 and a 2. Because that is about 70, close to 80, 85. So it could be a 1 and a 2. And this one should be growing to become a 3, 1, 3, 2, and it should be going, you know, at least we should have this as an extension of 161.8 to the upside to make this a 3. In that case, we are thinking that we want to do it with 5, which I don't agree with at this moment. So, which means that it's going to break at least primary B. So once it breaks primary B, you can now say that we're in wave 5. But if it begins to turn down, this one could have just been an A, B, and a C to the upside. If that is what is going now to become, that we have done an A, we have done a B, this also can be a 5-wave structure to the upside. It can be a 5-wave structure to the upside right from here. So it won't be from here, 1 and a 2. It will be an A, B, and in itself is a 5-wave structure of a C, 1, 2, 3 to the upside. In that case, what is going to give us will now be from here as the origin of that C wave, and this is the peak here of that C wave, and the low so far is where I see this. Yeah. So in that case, a 161.8 is going to be around this area. It's going to be around this area. In that case, it's going to be around this area. So we should be looking at making our sell order, if we are going to sell more, around this area, but we shouldn't break around this point. We should not break around this point. So we should continue to count 5 ways to the upside until we pick our order to sell. But this is the limit in case you want to sell. This is the limit. A break out of here, forget it. It's going to a big 5. So that's how to project. And if we have a reaction around this area to the downside, then we can now begin to see where the big C is going to get to. Let's see, on the 30 minutes time frame. If we have a bigger B, then we can see where C is going to get to before we turn up again. So that is what I can see for now. So it's still bullish. It's still bullish. What we are doing is a correction, and it could be an A, B, C, or it could be 1, 2, and we are going up for a wave 5, or we are still, that means if we are bullish, we should be counting 1, 2. It means we are bullish. If we are not bullish and we are still very corrective, we should be seeing this as A, B, C to give us an A. Then these will now be another A of this entire correction, A, B, and we are doing a C to turn down. So this giving us a 161.8 on this lower time frame. And once we get a 161.8 on this lower time frame, and we do a 4 and a 5, the extent of the break will tell us if we are coming down again, or the kind of reaction we get. So if we get a reaction and we get a 4th wave, and a 5 wave, so once we get the peak and we pick our sell, the peak becomes the stop loss, and that's how to guide yourself. So I'll be probably updating as this one is progressing, and that is what it is for now. All right, bye.